The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. Before we get started, which we'll do in just a moment here, I'd like to take a quick audio and video check. If you could let me know if you're hearing me okay and if you can see a screen that says Nadex Event Binary Options. Oh, fantastic. Thank you very much. We'll get started then. Really glad you could join me today. This is going to be a great topic. I think these contracts are going to be really fun and a great trading venue. So I'm looking forward to today's presentation. Really glad so many people could join us. I'm Dan Cook. I'm the Director of Business Development here at Nadex. And before we get started, because we do have a pretty big crowd, just kind of want to run through a couple of housekeeping tips here. First of all, this will be recorded. So if you want to view it again, if maybe there's something you missed, you'll receive a link to view the recording as many times as you like. Also, if you have any questions, just type them in the question box. You should see that on your control panel. Also, we want to respect everybody's time and stay on track. So I may see your question. It may be covered later in the presentation. I'll make sure that they all get answered before the end. So if I'm not responding right away, I'm really going to take a bulk of those questions at the end just so we can stay on track and really respect everybody's time. So with that, let's get into what we're going to cover today. We're going to talk about the event contracts we're going to be initially listing, the details of these reports, and why they're so important. We'll also take a look at some resources to get you started. Right? We don't want to just show you a contract and then not let you know where to begin. So we want to take you through this path. Some great resources lined up. And then we're going to take a look at the platform. We're going to take a look at finding these contracts on both our legacy platform as well as the new beta. So we'll take a look at the beta and take a look at some of the ways these and some ideas on how they could be traded. So before we begin, though, quick risk disclosure. Hopefully you all understand that trading on Nadex involves financial risk. It's not appropriate for everyone. You need to make sure that you're using risk capital. Money allocated for things like groceries or mortgage or car payments should never be used, whether that be Nadex or anywhere else, to trade in the markets. It's a sure way to lose a lot of money very quickly. So it has to be risk capital. This whole presentation is for educational purposes only. I am going to be, when we get into the platform, talking about different ideas or ways you can place trades, things to think about. I'm going to be doing this in the demo environment. These are just ideas to get you thinking. Anybody that's known me for a while knows that when it comes to trading, I might help you to try to form your opinion and give you some resources to do that. I'm never going to give you an opinion. This is going to be in demo. Please don't have your live account up there saying, oh, Dan did this and then it didn't work out for me. It probably won't. I'm going to make you do your own research, right? Trading's volatile. You can lose your money. And at Nadex, whatever you put up for the trade is your maximum potential risk, right? The one nice thing is no margin calls on any of our contracts, these contracts included. So the initial listing will cover two economic events. We're going to talk about the weekly jobless claims, and we're going to talk about the monthly non-farm payroll report. We've listed these two initially, but if you do have suggestions, if you think there are reports that may be interesting, there may be more that we decide to list in the future. With that, though, let's get into what these reports are, their impact, and why they're so important. So first up, we have the weekly jobless claims. It's typically released every Thursday, 8:30 a.m. Eastern Time. I say typically every Thursday. Holidays can impact this schedule. You'll always see on the platform, we'll take a look at that, what that actual expiration or release date is. But typically it's every Thursday. Clearly, if we're looking at something like Thanksgiving Day here in the United States, probably not going to be a lot of reports out that day, but typically every Thursday. This report is produced and released by the U.S. Department of Labor. Their website is dol.gov. It can also be called the initial unemployment claims or unemployment claims. So what is it? Let's get into the meat and potatoes here. This is a count of all individuals filing for unemployment insurance for the first time the previous week. Right? So that's anybody who previously wasn't on unemployment. Perhaps they've lost their job for some reason. They're going in now. They're filing for that employment insurance. Why is this important? Well, one, from a report perspective, it's really some of the earliest economic data. It's an important barometer for overall economic health. Clearly, if we see a big spike in people that are filing for unemployment, that's not a great indicator. Now, it might be a one-off instance, but it's not a great indicator of a healthy environment if you have a lot of people filing for unemployment. However, on the other side, if we see that unemployment claims come in much less than expected, that's a pretty good barometer that things may be looking pretty good. So it's really for overall economic health. Now, there's a lot of information in this actual report, and we're going to look at a sample here in a second. For the Nadex contract that you'll be trading, we're going to be looking at the headline number. It's always worth it, though, to take a look at these reports. This is not a long report. It's not heavy in data. But if you go to dol.gov, in this report, they'll have trends, right? So may not be important for an outright trading perspective, or perhaps you could find some indications in there for repeating patterns, particularly for time of year. Just giving you things to think about. But you can look at trends. There's also a state-by-state breakdown that will tell you where are jobs being lost, where are jobs maybe being picked up, a healthy environment. So very important information. You can also find a lot of historic data at dol.gov. Let's take a look at a sample here of this report. So on December 19th, there was a consensus estimate of 225,000 jobs. Now, when we get into the platform, we'll take a look at how the strike prices of these particular event contracts are structured. For instance, in this case, though, you might say, well, I think that things are a lot better. I think that the number is going to come in lower. Remember, the higher the number in this report, actually the worse economic barometer it is. So 225,000, what's your opinion? And don't worry, you don't have to be an economist. We're going to go through some resources where you can start taking a look at these things, and it really becomes very fun, right? You're kind of piecing together a puzzle. I think that's one of the greatest things about these contracts. Just by virtue of trading them, you can be your own armchair economist. You can really develop an opinion about the overall state of the economy and can become very well informed about all of the factors that really impact, or at least the major factors that impact that. So the consensus estimate was 225,000. Do you think it's going to be that or more, or do you think it's going to be that or less? You know what? Actually, let's take a quick poll. Probably some people watch this report. So anybody want to take a guess? On December 19th, we have a consensus estimate of 225,000. Did it come in better than that, meaning lower, or was the data worse than that? Okay, got a couple of responses here. It looks like we're a little bit mixed, but yeah, thank you for the responses. Oh yeah, they're coming in. All right, so the actual release, and this is where you're going to find it. When you see the news release, you'll see the advanced figure for seasonally adjusted initial claims was 234,000. This unfortunately was a little bit worse news. Now again, this is 1 week's event. If you were a buyer of this contract, meaning you thought that we were going to have a higher number, in that case, this would settle at 100 for you. If you thought it was going to be lower than that, you would be a seller, and in that case, you'd be a bit disappointed on that release. Although, if you're thinking about it from that way, if you're a seller, and it finishes lower, then it's great on both ways, right? So we are actually just about 50-50 on the indications here. So this can be a lot of fun. I mean, that was kind of fun for me right there, just watching all of the people take a look at that. So in this case, anything over 225,000, the buyers were the ones that would settle at 100. All right, let's get into one of my favorite reports, and has been for a long time, the non-farm payroll report. This is typically released the first Friday of every month at 8:30 a.m. Eastern Time. I again say typically, as depending on holiday schedules and how holidays fall, it may be pushed back a week. But it's typically released the first Friday of every month. It's released by the U.S. Bureau of Labor Statistics. Their website is bls.gov. They're actually part of the Department of Labor, but have their own separate website where you'll find the headline numbers right away. It's also called the Employment Situation Report. So we're going to be talking about different ways you can find information. I want to give you a couple different names, some different ideas to search. So what is it? This is a set of massive surveys. I mean massive. This is a monster report. If you ever watch one of the investing channels, whether it be Bloomberg, CNBC, and they're showing the traders before the report is announced, you could hear a pin drop. I don't care whether you're an economist, if you've ever traded at all and you've traded around this report, it is really one of the most exciting days of the month. These surveys cover so much economic data. What they are, there's an establishment survey, which is 400,000 businesses across 500 industries, covering several hundred metropolitan areas. A lot of data there to consume. Now, one thing I want to point out is that this is a survey. When we looked at the weekly jobless claims, that was an actual count. Now, they will go back and sometimes revise for seasonally adjusted. Non-farm payroll often gets revised. That said, and we'll talk about it more when we're looking at different ways to think about trading these contracts, it's a survey. So while we can use other indicators, right, sometimes surveys can be off by quite a bit. The second part of this report is a household survey. 60,000 households, all walks of life from around the country. What are their opinions on multiple factors? So this is just, the data compiled here is just amazing. This is such an exciting report to really dig into. And maybe I'm a bit odd in that I really love these reports, but it is very exciting. Why is it important? You've probably already kind of guessed just the amount of data alone from such a wide range of input points, right? We've got businesses, we've got households, and not just 1,000 of them. I mean, 400,000 businesses and 60,000 households, a broad spectrum. So again, it's, if not the largest, I can't think of an economic report that's actually bigger in scope than this, and it contains so much vital economic data. That's why it's so important, right? Not only that, this report can have a huge impact on financial markets. As a matter of fact, we're going to be taking a look today at trading the events, but a lot of our members actually trade these announcements using binary options or say even touch brackets or call spreads on things like the US 500, which is based on the E-mini S&P, the Dow, currencies. This report can impact markets across the spectrum. It can impact commodities, stock index futures, currencies. It's huge. It's actually not uncommon to see swings 3-4 times greater than what you would typically see, right? I mean, I've seen, the Dow move 300 or more after the release of this report. I've seen it move 300 only to drop 400 following. You can get big swings. Another plug for Nadex here, but I think one of the reasons why we see so many people trade these types of markets, whether you're trading the US 500, currencies, commodities, whatever, is that defined risk aspect. I spent a lot of time in various markets, and I would typically always be flat. I was always very excited for this, but it had a huge propensity. If you were wrong, you could be really wrong. And so by defining your risk, you know what you're putting up front. And that's really one of the important things I think about the contracts that we offer. So the impact, though, can be huge, right? Firms have literally spent tens of $millions on supercomputers developing algos that can actually read this data to try to get an edge on the market and determine a direction, possibly before the other participants can get in, right? When you're looking at something like, if you're thinking about the value of the Dow swinging 300 points and you can get a slight edge there, it could be very important. Now, you don't have to worry about that. Don't let that intimidate you. We're going to be looking at the event contracts and how you can trade them. Interestingly, though, if you want to read about some of the ways that people have tried to leak the data early, whether to their firm or just to whomever, do some research on that. It really reads like a spy novel. This information is so closely guarded. Just to give you an idea on this process, just because I think it's actually very fascinating. So as I mentioned, it reads like a spy novel, right? Different times where people have tried to leak data. I believe it was 2011 when the BLS employed Sandia Laboratories. If you're not familiar with them, they are basically tasked with safeguarding America's nuclear secrets, as well as a lot of other extremely sensitive data. So they're very good at their job. And so they came in and basically revamped all of the security, tore everything out, built it all back in as far as security. And what that security looks like, right? There's a select pool of reporters, journalists that get to see this data slightly before it's released. And what that process looks like, obviously they've had their clearance, their background checks, everything. So they arrive, they go through one round of security, they give up, they're basically scanned, wanded, everything that you can think of. They're required to turn over basically all of their possessions, phones, laptops, you name it. If they still have a pager, they'd have to turn that over. You're not even allowed to bring a pencil in. They're basically left with the clothes on their back, and those are all scanned as well. So all of their possessions are taken away. They put them in a locker. Security holds their locker key. They're taken into what's called the lockup. This is also, by the way, after they've given up everything, they go through another round of security, which is the same just to verify that they don't have anything. So the lockup is a windowless room. I don't think anybody other than Sandia probably knows exactly what it's made out of, but I do know that there are no external signals allowed in or out of that room. There is no Wi-Fi. There are no cell signals. It is completely a dark room from a communication perspective. There's a bank of government-provided computers on the one wall. At 8 a.m., reporters get their first look of the report, absolutely sequestered. They have no communication with the outside world whatsoever. They have 30 minutes to type up their report and get it all ready. And it doesn't matter when they hit send, it will not be delivered until those lines are opened up at 8:30 Eastern time. And then the response from the markets is huge. Just wanted to share that with you because I don't know if a lot of people know the sensitivity of this data and why it's so important and the huge impact it can have. Let's take a look now, actually, at the before I ramble on about further security and stuff. Let's take a look at an example, just like we did, and we're gonna get your fingers ready because we're gonna take a couple more stabs at seeing what this report may do. So here was December 6th, consensus estimate 181,000. All right. In this case, unlike when we were looking at unemployment claims, right? Unemployment claims, a higher number was kind of a negative indication for the economy, whereas a lower number was a positive indication for the economy. In this case, the more or the higher the headline number, the better for the economy it is. The lower, and now, we're looking at consensus, so there's, some back and forth there, but typically the lower the number, the less positive it is. So, all right, let's go ahead. I'll give you about 30 seconds here. Did December 6th come out better, meaning a higher number, or worse than the estimate and a lower number? All right, looks like we've got some, we're going to see some good double-sided full in these markets. It looks like we've got a lot of some different indications here. Well, you know what? Let's take a look at it. So again, this report, it was 40 pages in December. What we're going to be looking at for this contract, though, is the headline number. If you want to dig into all those pages, you can. In this case, it was a blowout to the upside. It was a huge miss on the estimate side. And I say miss on the estimate side, but very positive for the overall indication of the labor market. 266,000 jobs, according to the survey, were the actual number, with only 181,000 estimated. Now, I want to point out how large these misses can be. Right? They're not an actual number, remember. The weekly jobless claims is an actual number, or an actual count, excuse me. This is a survey, and surveys can be incorrect. Economists can be incorrect, right? So this is just an example. So something to think about when we're looking at the strike prices. Keep this in mind. and we can always come back to you if you need to. So again, you might be saying, well, I'm not an economist. I just got both of those wrong when I was guessing on this webinar. Don't worry about it. Let's take a look at some great places to start, right? Because I want you to start forming opinions, whether you're trading the event contracts, which I hope you at least give them a shot because they are a lot of fun, right? And the great thing with Nadex is you can actually start out pretty small. Try your hand on a couple strategies, and we'll talk about those in just a bit. So don't worry if you got both of them wrong or you're saying, I'm not an economist. What the heck do I know about this? One, if you're trading our other contracts, you should just be aware of these reports, and I'll show you where you can find some other ones in just a bit as well. So where to start? We'll go into this site in just a little bit, but dailyfx.com is a great place to start. Again, whether it be for these two event contracts, but if you're trading here at Nadex and you're trading any of our other contracts, you're going to want to check out their economic calendar. So if you go to DailyFX, simply go to calendars, you'll see economic calendar. And then for this one on December 26th was the initial jobless claims report. Right? So you can find this data. You can see what they're forecasting, as well as the impact on the financial markets. We'll dig into this a little bit later. So this is, though, a great place to start in forming an opinion and at least being aware of what's out there, right? There are different strategies, and binary options are fantastic, not just for event contracts, but all of our other markets. If you think that there's going to be a report that could impact the markets, that's opportunity right there, and you need to identify that. Additionally, if you're already in a trade and perhaps you're already profitable, but a report is coming out, you might want to consider closing off that trade if you've already got quite a bit of profit, right? You don't have to hold it till expiration. You don't want to give everything back if all of a sudden a report comes out and changes the whole texture of the market, right? So number one starting place, dailyfx.com. A few other resources here. Google, Bing, whatever your preferred search engine, look up employment situation report. You can look up estimates. Feel free to go crazy with what you're looking up on this, as far as economic indicators. There's just more searches than I could probably name if we sat here for a week. Go to your search engine, great information. Maybe search something like best economists at predicting non-farm payroll report, right? Because that's what we're doing. Maybe somebody has a great track record. There are a lot of economists and firms out there that produce these prior to the report. Right? Next one is ADP. If you're not familiar with ADP, they release a report monthly. It's typically 2 days before non-farm payroll. Actually, the next release for ADP is tomorrow. ADP, in case you're not familiar with them, is one of the largest payroll and employer service providers. They cover over 27 million employees, really across a wide spectrum of industries. I'm not going to tell you if it's correlated to the non-farm payroll report. I'm going to let you do your own research. Remember, I'm just here to give you resources and formulate your own opinion. The Institute for Supply Management. They produce 2 big monthly reports. They produce a lot more reports, but 2 of the big ones are the manufacturing report and the non-manufacturing reports on business. Both of these are a survey of 400 purchasing managers from each respective group, right? So 400 purchasing managers that are in the manufacturing side, 400 purchasing managers that are in the non-manufacturing or service side, right? For both reports, a reading over 50 is good for the economy, a good indicator of the economy. It means that the market is expanding, growth. Under 50 means that the market is contracting. So you may want to look at these and say, okay, well, I'm gathering my data points here. For example, if we look at the December manufacturing employment outlook, the employment part of the manufacturing survey, it actually fell to 45.1. Remember, below 50 is not a positive indicator. So this dropped all the way down to 45.1. And in the notes, it said that it was the employment part of manufacturing was contracting faster, right? So that's only one data point, though. The non-manufacturing report is overall positive with employment last reading of 55.2, right? That's the employment side, right? There's different data points within each report. So all we're doing right now is collecting data points to form an opinion. That reading was 55.2, although in those notes, it noted that it was slowing. From a market impact, if we're looking at things like stock index futures, currencies, commodities, commodities particularly can be very, depending on what sector within manufacturing, commodities can be hugely impacted by this. So definitely well worth taking a look. From a market impact, historically, the manufacturing index has a bit more impact. However, if we're looking at event contracts and trying to form an opinion, the non-manufacturing report actually covers a greater portion of the economy. Take a look, form your own opinion, right? We have one that's showing its contraction at a faster rate and one that's expanding but at a bit slower rate. The next one is the conference board. By the way, and these are all reports that are really fun to look at. And again, if you're trading anything, whether that be Nadex, which I hope you are, or anywhere else, you should be aware of when these reports are going to come out because they do have a propensity to move the markets. So the Consumer Confidence Survey from the Conference Board, this actually last one came out December 31st, and it reported that consumer confidence had dipped slightly by 1.3 points. Right? It wasn't a huge dip. And people consider a lot when we're thinking about this. Again, as a survey, consumer confidence. A couple things though really, if you think about it, impact consumer confidence. And there's a lot of factors, but two big things, right? What is the news lately? Employment outlook, things like that. What is the overall economic state that we believe the country's in, right? After all of these reports, we'll have actually a much more informed opinion about these. But within this consumer confidence or the conference board, they also report an employment trends index, right? This actually takes into account 8 labor market indicators. And the last time it was slightly positive, which was, I believe it was December 9th this came out, it was slightly positive, ticking up 0.2%. Not a huge move. Maybe you look at trends and different things. That was the November report. The December report isn't out until January 13th. But again, something you can take a look at, maybe to form an opinion if you go back, because we're looking at surveys from December. A lot of this data could be relevant. Twitter, actually, social media, I actually really like Twitter. Not everything on there is great, right? You can find plenty of videos of dogs and cats and everything, and those are cute. But in regard to event contracts, right? Maybe you search non-farm payroll. Again, similar to Google, you can find economists on Twitter. You can find companies who actually give economic indications. A lot of times large banks will give their forecast, right? Because when we're looking at the consensus estimate, it's actually consensus of a lot of people. Some places, and I'm not going to tell you where because you're going to have to find it on your own, will actually publish, if they have, let's say they have a group of 20 economists, they'll publish over the course of, say, 12 months or 2 years, which economists have been closer, which economists have been farther away. No guarantees, but something else to look at. One other thing on Twitter, and I'm not going to mention any names here, that's not my place, but there's a person who's rather known for, among other things, tweeting. Very prolific tweeter. Also, he's one of the few people who get the NFP data the night before the release. And actually in June 2018, he put out a tweet that he was looking forward, in quotes, to the jobs report. And this was about an hour before the release. Can't guarantee that there was any correlation, but the actual report came in well above the estimate. So, maybe you want to find some people on Twitter to follow that can help you form an indication. Again, look for economists, look for companies that are putting out non-farm payroll. If you search employment situation, non-farm payroll, if you're searching weekly jobless claims, go crazy with the searches. These are just a few places you can look. Clearly, as you do your research, you might find some even greater resources than what I have listed here. All right. So now, before I go to the questions portion, let's go into the platforms, and then we'll come back and we'll answer questions, but I want to show you where to find additional information, as well as how to find these contracts on the platform and how to execute some trades. So give me 1 second. All right, so this is dailyfx.com. We're talking about it today from their economic calendar perspective, but if you're trading, this is a fantastic resource. I mean, if you just look at the top of the screen, you've got currencies, and what they're doing is they're a bearish bullish indication. You've got they've got great analysts, great writers there. They're also, I know, adding a lot more, particularly the economic calendar, which we'll look at in a second, but I'm going to let them take care of that announcement. But all sorts of news and analysis. You can see crude oil, price outlook, things like that. If you're trading, use this as a resource, right? You've got trading strategies, tons of education. Right now, though, let's go to the economic calendar. All right, and so I'm just going to do the next, oh, my mouse just went a little bit crazy there. I'm just going to do the next 7 days. Right? As you're looking down this calendar, and that's why I'd say it's so important to know what's coming up, whether you're trading these event contracts, which I'm going to show you in just a moment. But let's say you're trading the pound dollar. Maybe you want to know GBP unit cost. If you see a high indication here, right, that tends to have a bigger market impact. So if you see a high on the GDP, high impact report on the GBP, maybe you're going to be looking towards currencies or the euro, right, as trading opportunities. You want to know when these schedules are, right? Even if you're in a trade, you might want to know, hey, it's time to take some of this profit if I'm profitable in that trade. So I'm just going to scroll down here, and you can see there are tons of reports all the time. Let's see, we've got a couple coming out of China that are there. Oh, here we go. Here's one that's pound dollar could be impacted. Euro pound, high, GBP, BOE, Governor Carney speaks. Let's just scroll down here a little ways. And I'm going to go to January 10th. Here we see USD. It's the country that's releasing it. We've got the change in non-farm payrolls. The forecast right now is for 162,000 jobs to be created. The previous was 266,000. So we're going to take a look in the platform, and we're going to go and, I'm going to take some people's opinions as well. I like this to be interactive. I don't want to just feel like I'm sitting here talking to you. So the forecast is for 162,000 versus the actual last month of 166K. Right? So this is where you'd find it. You're going to know where it's coming out from. Right? So if I click on that, you'll get a summary on what it is and also any related news and analysis. Great place to look. Okay, so let's hop into the platform. And I'm going to go here to this platform that looks pretty familiar. Close this out for a second. On the left-hand side in the Finder, and again, this is my demo account. We're going to be talking about various things here. Please don't try to trade along with me. I'm doing no analysis. I'm not looking at any research. But I want to give you some ideas. Well, first, I want to make sure you can find them so that if you do have an idea. And two, what are some thoughts on trading them? So if you click on events binaries, jobless claims, and non-farm payroll. I'm going to click on non-farm payroll. Now, one thing I want to mention, and we'll talk about this in the beta as well. If you come to your list, you may need to sort it, right? Top to bottom. So you can click that button. Some people like to prefer to see the big number on top, the lower number on bottom, others don't. So you can click that on your preference. So right now we have an estimate of 162,000 jobs on the non-farm payroll headline number, right? As you can see there, that's the middle strike right here. And then we have 192,000, 30,000 higher, 222,000, which is again strike increments of 30,000, right? So when we're looking at this, and I'm just going to take this 162,000 here. Who wants to buy? And one thing I want to point out, because this is a little bit unique compared to the other binary options, which have an underlying market where we do the average for the settlement. And those are always greater than. In this case, it's going to be greater than or equal to. So if the number is, let's say we were a buyer at 162,000 and it comes out flat on 162,000, that contract actually settles at 100 for the buyers. I want to make sure that you're aware of that is both greater than or equal to. Additionally, because I could see this causing some confusion, these are not ranges. So if you say greater than 162,000 and it comes in at 200,000, you're still correct, right? If you were a buyer, right? It doesn't have to be between these. These aren't dividing lines. So if you're saying it's over, If you're saying it's over 180 or 102,000 and it comes in at 500,000, okay, as a buyer, then you're still correct. If you say it's going to come in under 222,000 and it comes in anywhere below 222,000 as the seller, then you're correct and you get the $100 payout. So, all right, so I'm going to bring up an order ticket here for 162,000. I need you to guide me here. Who thinks I should buy? Who thinks I should sell? We've got a little bit of both going on here again. Oh yeah. All righty, I got to go with what's so far the consensus, which is buy. Now, something I can do here. I can buy this at 58, right? I've got an order of size. I can use a market order. Could go ahead and execute that. I've got my buy. I'm going to be putting up, basically I could make $42 on this one. Something I want to point out here though, right? With new contracts, any new market really, sometimes you don't see the tightest bid offer spreads, right? Because we need some flow to come in. And this is important, and I've been preaching this for years on all Nadex contracts. I want to show you how you can work an order, right? There's no guaranteed fill, but let's say 58 seems like a pretty high price, right? Because this is what the estimate is. I might want something a little bit better. I'm going to go to a limit order. So right now we can see bid offer, and again, this is in the demo account of 48.58, right? Maybe I think a fairer price for this, in my estimate, is 54. I want to buy one contract at 54. I'm going to place this order. Okay. Now this is a working order, right? But let's bring up that order ticket once again. Right. I'm not guaranteed a fill, but right now my 54 is the best bid out there. If somebody wants to sell, I've made a better price for myself if someone takes it. Not only that, I've made a better price for somebody that wants to sell. I've tightened up the market. And that's really important, right? If we're looking at these and we're saying, okay, well, I want to get the best possible price. You'll go to the top of the book in that respect. So now somebody, if they want to come in and sell, and as we saw just here, and well, you can't see my questions box where everybody was typing it, we had pretty good flow on both sides, right? If you're a seller, would you rather sell at 54 or at 48? I'd rather sell at 54 all day. If I'm a buyer, do I want to buy at 58 or do I want to try to buy at 54? Again, I'm not guaranteed a fill, but I can work that order. And when I do something like this, I go to the top of the book. So that's very important. So I've already placed that order. Something else to think about. Give me 1 second here while I take a drink of water. Right? Let's say I'm doing my research. And maybe I go back 10 years and I've found an indication that the consensus estimate from economists, the total number of that is off about 28% to say what the actual number comes out to. Or maybe I go back a year and I say, wow, they've been missing by 40%. Maybe there's some stuff going on in the economy that's not giving them a great gauge as to what non-farm payroll may be, right? Maybe I do my research and I say, okay, wow, if we get a much better than expected number, it's typically a much bigger miss by economists. Whereas if we get a worse number, it's not as big a miss. And I'm just throwing these out as ideas. Again, do your own research. But let's say that, we saw and we're like, okay, we're doing our research and we think that on average, economists miss by, we'll just say 30%, right? So I might look at that and say, well, history tells me that on average they miss this by 30%, right? So what is 30% roughly of 162,000, right? 48,000, right? And we have strike increments of 30,000. So again, I'm just giving you ideas and things to think about. Now in this case though, I don't know which side really maybe is going to miss, right? Could miss up, could miss down. But let's just say I think it's going to miss by at least 40,000. In this case, I know my upper strike is 60,000 away. So maybe I look at this strike right here and I say, okay, and I'm going to go back and I'm going to place another limit order here. Let's say I think statistically, if I get this at $20, place these, if I get this at $20, right, I'm putting up $20 with the potential to make 80, not inclusive of exchange fees. We're going to do basically what's called a strangle, if you've ever heard of that in an options term, right? We're basically saying we know that this is going to move, or we expect a big miss here. We just don't know which direction it's going to miss to. So I'm going to choose the 192,000. I'm going to place that order. Now, what if it misses to the downside, right? Now I want to be a seller if I'm expecting it to be worse. So I'm going to go in here and I'm going to sell this. I'm just going to go to my limit order again because, you know, I don't want to sell it at 78. 22, not too bad of risk. Let's say I want to sell that at 80. Place my order. And as you can see in both cases, here's my 20 and here's my 80. I'm the top of book for each side of that trade. If these get filled, right, now I've put up $20 risk on each side. If one of those is right, I make 80, right? So in that case, it would be a net of 60, not inclusive of exchange fees. So you don't just have to take, oh, I think it's going to be better. Now, in some cases, you could just say, you know what, I think it's really high probability that it's going to be greater than 102,000. Probably in this case doesn't do a lot of good to buy at 99, but you might want to say, I think there's a 92% chance. And again, I'm just throwing out numbers. You could say, I think there's a 92% chance that it's going to be better than that. So if there's only a 92%, I don't want to buy at 99, but maybe I go in and I try to buy at 90. Okay? Now I've just improved that bid for somebody else that may want to come in and sell. Right? These are things to think about as you're forming your opinion. Maybe you have a straight, I think it's going to be better, I think it's going to be worse type of opinion for either non-farm or the jobless claims. Maybe you're going to look at stats and say, well, I think on average this is their miss, right? These are things to think about, and you can do the things like this, the strangle I just showed you, where you can take both sides of the trade, right? If you're taking both sides, like in the strangle, you're probably going to want to sell at a high level and buy at a fairly low level. Similarly with the other markets, you can do that with all of our markets because of the multiple strikes. Maybe you're doing your analysis and you've started researching these reports and you're looking for a big shock, right? When do the biggest market moves come? Right? When there's the biggest difference between, you know, the positive and the negative, right? Report, right? So if I get 120 more to the upside than what was expected, or I get 120,000 more to the downside than what was expected, that's really going to move a lot of markets. And so by actually paying attention to these reports, trading these event contracts a few times, you can start translating this into the other Nadex markets. For example, let's say you look at non-farm Friday. What happens in the Dow? Is there any correlation between the size of the miss and how far the Dow moves, or if it moves at all? What's the average move of the Dow on non-farm Friday? What about the E-mini S&P, which is the Nadex US 500? You know, perhaps you look at your data and say, okay, well, on an average day, the E-mini S&P moves 20 points, but on non-farm Friday, it moves potentially 60, 80 points. That's good information to have and to be thinking about as you're placing these trades, right? All right, if you haven't been into the new platform, I'm going to hop in there real quick as well. So if you see my platform here, I'm going to go to the upper right-hand side, switch it to the new platform. All right, just click that button. It's going to take me to my login screen. Encourage everybody to check it out. I'm going to log into my demo account here. All right, so we'll let this load up. All right, so event contracts are binary options. Very easy. Just go down the Finder a little bit there. Click on events. You can see jobless claims, and you can see non-farm payroll. All right. Same strike prices. If I want to take a look at this, oh, by the way, notice, yep, there's my 54, still waiting, still got my 80, still got my 20, maybe they'll fill. If I want to bring up an order ticket for this, I can do that. Change my market order to limit good till canceled. Same process, just a little bit different look and feel. If you haven't checked out the beta version of this platform, please do. You can do it for event contracts. Check it out for all of our contracts. Very proud of this. Most of this, actually almost all of this, has been built on feedback from our members. And so I encourage you to take a look. Give us that feedback. Help us shape the future of your trading experience at Nadex. So important. We take your feedback seriously. I've sat in so many meetings over the last so many months, actually over the last so many years that I've been here at Nadex, where we discuss the feedback. We see what can be implemented, and we do our best to do that to shape a really positive trading experience. Now, one thing I will point out, there's no underlying market for either non-farm or jobless claims. So you won't see a chart on these two, right? There's no underlying market. You can see a chart for everything else because there's ticks. These are a single print, so it makes a pretty boring chart. So if you see that, your platform is not broken. It's just because there is no chart for these events that haven't happened yet. So real quick, before we go back to take more questions, and I'll go through the ones that I have. If you're not already a member or don't have a demo account, very easy. This is nadex.com, right? Click on open a demo account, right? Take a look at them. This will take you about 30 seconds, right? All right, I've got my test up there. Take you about 30 seconds, right? If you want to open up a live account, very easy. Click open a live account, brings up the app form. 5 easy steps, go through it pretty quick, and that's, that's it. I encourage you to definitely try out these contracts. And you know what? In order to do that, we've decided to give you actually 2 months of no exchange fees on event contracts. Right? So if you want to trade these contracts, before I mentioned that the trading strategy was not inclusive of exchange fees, but at some point there will be. Now's your opportunity to get in and try them with no exchange fees on these contracts. Right? You can do it in demo. If you do it in live, you're not going to be charged exchange fees. All right, so let's hop back here. And I am happy to take some questions from people. Oh, yep, and just to let you know, the exchange fees, I believe, initially will be done as a rebate at the end of the month. So they will initially come out, but then they'll be rebated back for the event contracts, whether that be the weekly or monthly employment numbers. This is a good one. This is less event contract specific, but more about the beta platform. The question is when is the next update to the beta platform? It's happening pretty continuously, actually. Some of it may be fairly minor that you might not notice. It's things that we've just corrected or things that people have pointed out, which could be done a little bit differently. One of the great things about this technology and the way it's structured, very similar to our Nadex Go mobile app, right? We don't do native apps anymore. It's built on PWA technology, and that actually gives quite a few benefits. It's much lighter when we're talking about the mobile app. It's much lighter, more responsive technology, and so it's just when you're trading, right? You want something that's responsive. Additionally, when we do updates, you don't have to worry about downloading anything. That's particularly important on the mobile app. I don't know if anybody has a bunch of apps on their smartphone, and then all of a sudden you find out you have to update like 60 of them because they stopped working or some other update came out. Doesn't happen with PWA on the mobile. Similarly, we're pushing updates quite frequently. So you know what, Henry, if there is something specific that you'd like updated on, hit the feedback. If there's something specific you're looking for, if you go to feedback in the platform, let us know. We'll be able to get back to you with a response on that. Let's see. Can I send this video immediately? It will be out today, I presume. I do have to have it reviewed just to make sure I didn't, just say anything too crazy. We want to make sure that everything was great. And it does take a little while to render, but we will have it out as quickly as possible. And everybody that participated today, whether participated or even registered, will get a link to this. But we will make sure you get it in plenty of time to place those trades this week. Alrighty. I'll say, yep, absolutely. This is, you'll be able to replay it as many times as you like, whether it's for information or maybe you just like the sound of my voice. I'm going to guess it's not that though. But yeah, feel free to share it with your friends as well. If you haven't seen the email, by the way, if you're a member here and haven't seen the refer a friend email, here's a great opportunity to share a video with your friend while also mentioning your refer a friend link. If you're not familiar with that program, give us a shout. And be happy to help with that. Refer a friend at nadex.com. Let's see. Okay, yeah, as far as the new platform, one thing, Robert, I'd love for you to actually, we will be having a lot of education coming out on it. It is still in beta, so a lot of things are changing. So it's difficult to produce a lot when then all of a sudden more changes and then you have to produce more. And we've really been focused on the development of it. We are going to have a whole catalog of platform walkthroughs. I believe there is one, you know what, let me hop. If not, after this, I can get one out to you. Let's see here. Let's see. It's just going to try to pull up something here. By the way, if you haven't been to our webinar page, we are actually in the process of revamping our webinar page. So we still have a lot of on-demand webinars. We're going to have a full schedule out for you very soon. And so we're also going to be producing a lot of education. And if you call in and you're a member, you mentioned you're a member, call in, ask the question. It is very, to me, I think it's pretty intuitive, and I'll do a quick walkthrough, right? Oh, by the way, if you want to give us feedback, oops, I'm going to do that again one more time. Down here on the left, click feedback, right? Type in here. I think Dan is not good at webinars, right? You can give us any feedback you want, but actually, you know what? Please be nice to me at least. I do try hard, whether it comes across that way or not. But we will be having a lot more education on this as well. But again, I encourage you, go into the demo environment and really have a go with the demo environment. Any platform you're not familiar with, definitely do that first. Oh, my pleasure, Michael. You know what, Henry? I'm going to have to get back to you on that one. I might be able to see where that stands. Okay, let's see. Oh, thank you very much, Scott. Okay. Oh, so sometimes here's the question: why is the bid and ask different from the live to demo? So you know what? They are both based on the same technology. Actually, it's probably, in my opinion, the most realistic demo experience, only because it's still the same core technology. A couple of things that are different, right? Because it is the same technology, and as I showed you, everybody can be their own market maker. In the live environment, we actually have more market makers. If you actually do a side-by-side comparison, often in most markets, the bid offer spread is going to be tighter. It's going to be better, more attractive than what it is in the demo. The market makers that are in the demo environment, right? Where are you going to focus, right? You've got a live market going on over here. They do a great job and they update it, but they're not going to be as updating it as fast. So you're going to see some discrepancies. One of the biggest things also is, people come in and they, what I'll say is play around with the demo, right? They treat it like a play environment when you shouldn't do that. You should actually do your best. You'll never learn how to trade in a demo environment. It's really there to learn the platform, right? You can kind of test some concepts and different things, but you'll never learn. You'll never have the same emotions in a demo environment, right? And as such, you'll see people do some crazy things, right? I don't know how many people on this call have placed a 500 lot trade, but you'll see that in demo quite a bit, right? Not the way to trade, but you'll see different pricing discrepancies because they are both true exchange environments, and each person can be their own market maker. Let's see. Oh, thanks, Todd. Oh yeah, absolutely, Henry. One of the things, and that's why we've still got the platform that people have been looking at for years. That's still up and running. We're not going to do anything with that until we have at least all of the features in the beta. Now, is there a better way we can do them in what's currently the beta? Maybe, and that's why we're looking at that. Oh, thanks, Babsy. Alrighty. Oh, yeah, this is an active group. Thank you so much. Thank you. Oh, got a lot of them flying in here, so. Oh, hey, Todd. Yeah. Well, you'll see like five up on the in the markets at points. Clearly, you can put in as many as you want. Now, whether you get filled or not at that price, right? But that's what that is. That's the price for those five. Similar if you go to a store and they say, "Hey, we've got five of these things on the shelf. That's all we have. This is the price." Now, market makers are a bit different, right? Because they've got probably more stock and inventory in the back. Um, but yeah, you can still enter trade. Now the question is, do you get filled? Right? It might be difficult to get filled on 1,000 contracts, but if you put up, say, a 10 lot, one, you're then going to be, if you take out that side of the book and you've got 10 working, maybe somebody else comes in and fills your other five. That's the importance, and I think that's the importance really of all of our markets is for people and all of our members to not just take what's there, but to actually work some orders to try to get a bit of an edge. Um, no guarantee that you'll get filled, but it makes a much better market for everybody. If everyone was actually doing that, um, the the prices, because basically you're agreeing on a price. You're helping somebody else get to their price. They're helping you get to yours. Um, but no, that is not the limit. Let's see. Yes, there's going to be a lot of live webinars coming up. Very soon. Hopefully, here in the next week or two, we'll be getting some more out to you. Really wanted to revamp that program, make sure we had quality content based on feedback on what people wanted to learn. Thanks, Simon. Thank you, James. Oh yeah, actually, that's a great question, James, and thank you. I should have pointed that out. So yes, you know what? And I'm actually going to hop in here and do this. Let me find my cursor here. So let's say we wanted to do a limit order. We're going to do 56 for one contract, right? So I've got my orders here now, right? And so I'll walk through the question here. So let's say I have this contract right here. I just clicked on my working orders tab, right? So if I want to change that before it's filled, right, until it's a position, I can amend that. So if I just want to say, I think I'm wrong, I could delete that order. Or let's say I wanted to change it to two contracts or change the price. Maybe I want to make it a price of 55.50 and change it from one to two contracts. And then I click amend order. And as you can see, now I've worked that. So yeah, that's a great point. I should have hit on that. So yeah, if it's a working order, meaning it's not filled, it's not an open position, you can go in and delete that. You can amend it. You can change the size or price. Absolutely. Oh, also I can help out with that. So the question is, where can I find videos on how to use spreads? So if you go to on demand, okay, we have upcoming and on demand, you can search by various things. You can search Nadex call spreads, and there's a lot of various things in here. Now, some of the Pro Series, they contain call spreads, but you might have to flip through, right? Forex, Nadex Edge, dot mistakes, call spreads here. A lot of different, maybe they're looking for strategy videos, right? So just go there and search around. We also on our YouTube channel, you can find some call spreads videos. But yeah, go in here. It's fully sortable. Bob Iacchino actually from Path Trading Partners did a whole series on spreads. It starts out, fairly basic, but he actually does a lot of um, great in-depth things on the spreads. Apex over there has done a lot. There's a lot of great videos out there, and so you can find those in the on-demand strategies section. Alrighty, I think I have covered all of the questions. If there's something you think about later with regard to this webinar, again, I'll try to get this link out as quickly as possible. If there's something, townhall@nadex.com, right? So with regard to the question on what other education we'll be offering, townhall@nadex.com. I want to do what sort of strategies you're looking for. Do you need more basics? You let me know. That's what we do here. We're here to help you out. With that, I really want to thank everybody. This was a fantastic group, a lot of fun, a lot of great questions. Really enjoyed having people make their estimates or their predictions on what these reports would do this week. Go into the demo account, put those on, do some of the research. It is really fun, and they're very interesting contracts. And at least be aware of these various reports. Go to the Daily FX calendar. Be aware of the reports that are coming out that are impact the markets you trade. I want to thank you all for joining me. Had a lot of fun, and really looking forward to getting a lot more questions and seeing you all in there trading.